Lucid Group Inc. is trading at exactly 4.68 USD per share during the active intraday market session, marking a subtle shift of minus 0.58% as market volume tests familiar boundaries. While the surface data points to minor daily fluctuation, the true narrative lies in the massive divergence between what institutional blocks are preparing for and what retail participants see on their phone tracking applications. Look past the immediate decimal point, and you will find a highly strategic positioning by sovereign entities that suggests the current floor is being defended far more aggressively than public order books indicate. This hidden layer of financial buffering is completely altering the short-term options risk profile for the company, making the standard retail technical analysis almost completely obsolete. The common understanding among public market participants is that this electric vehicle manufacturer is stuck in a terminal operational bottleneck, drained by massive capital expenditures and struggling to find traction in a hyper-competitive automotive landscape. The standard view suggests that luxury sedans and premium sport utility vehicles face a saturated marketplace where pricing pressure erodes early advantages. However, challenging this common viewpoint reveals a structurally unique setup. The business is fundamentally a sovereign-backed technology incubator operating under the guise of an automotive startup, with its largest shareholder essentially ensuring a capital safety net that independent rivals cannot access. This setup shifts the evaluation from simple manufacturing volume to a broader debate on strategic long-term endurance, forcing a complete recalculation of how risk is weighed against potential market share acquisition. Recent stock movements have been intensely volatile, driven by significant trading volume spikes that point to substantial institutional reallocation. The daily trading ranges have widened considerably as macroeconomic data and domestic interest rate updates force asset managers to recalibrate growth portfolios. When tracking these intraday swings, clear patterns emerge, where heavy blocks of shares change hands near established technical floors, indicating a coordinated defense by major holders rather than random retail interest. This institutional activity directly correlates with broader sector momentum, where premium clean energy equities are being separated from low-tier speculative plays by funds searching for entities with robust balance sheets and long-term liquidity. The latest quarterly financial disclosures have intensified this market tension, following a visible miss in top-line revenue estimates that brought operational losses close to the $1 billion USD threshold. The market reacted with immediate volatility, selling off shares before finding a stable baseline as investors parsed the details of the report. This earnings reaction underscored the deep friction between immediate delivery metrics and massive research allocation, as spending on advanced powertrain integration and scaling production facilities continues to outpace current sales inflows. Adding to the near-term complexity is a series of active securities class action lawsuits targeting prior production guidance and delivery projections. These legal filings have created a noticeable layer of negative sentiment, presenting short-term headwinds that weigh on the equity despite ongoing technical progress at the production facilities. To get a true sense of where the broader market stands, it is highly useful to look at how different investors deploy their capital across the industry. Whether someone is actively analyzing Tesla stock, maintaining long-term positions in Apple stock, or trading high-momentum assets like Nvidia stock, the platforms they choose define their market execution. Many individuals rely on an automated approach using Schwab Intelligent Portfolios or explore automated options on popular investing sites to streamline their long-term wealth planning. The rise of online investing and modern online investing tools has made accessing individual brokerage accounts simpler than ever, giving retail traders immediate access to institutional-grade analytics. For those who lean towards comprehensive multi-asset platforms, utilizing established services like Fidelity Investments, or managing specialized assets through Fidelity ETFs and Fidelity Mutual Funds provides a traditional, highly stable foundation. Traders handling active portfolios often balance their assets between a Fidelity brokerage or Fidelity wealth management account, while keeping tax-advantaged capital secure within Fidelity IRAs. The convenience of checking real-time positions on the Fidelity mobile app or executing complex options orders through the main Fidelity trading platform allows individuals to react instantly to sudden shifts in equity trends. On the other end of the execution spectrum, the retail trading community heavily leverages simpler, high-speed platforms. Using Robinhood stock trading and tracking rapid price movements on the native Robinhood app has redefined how modern market participants interact with individual equities. This environment thrives on immediate execution, where users can split capital across traditional Robinhood investments, hold digital assets via Robinhood Crypto, or park uninvested capital inside Robinhood cash management accounts. The ability to purchase Robinhood fractional shares means even high-priced automotive and technology equities are fully accessible to smaller accounts, driving rapid shifts in retail volume during critical trading hours. At the same time, platforms like SoFi Invest, and the broader SoFi investing ecosystem cater to users looking for a blend of active decision-making and automated support. Investors using the platform can easily toggle between tracking specific SoFi stocks, building a diversified base with themed SoFi ETFs, or letting an automated system handle balances through the SoFi Robo-Advisor. For hands-on market participants, leveraging SoFi Active Investing on the core SoFi trading platform offers a direct path to capture short-term momentum without heavy intermediary friction. Meanwhile, advanced international traders requiring deep institutional access often turn to Interactive Brokers, using Interactive Brokers trading tools on the comprehensive Interactive Brokers platform. This setup minimizes tracking issues by offering highly competitive Interactive Brokers fees, ensuring that whether a trader is opening a new Interactive Brokers account or running high-volume Interactive Broker stock trading strategies, execution remains incredibly sharp. Comment below how many shares of Lucid Group Inc. you currently hold in your portfolio. To understand why this capital structure matters, it helps to examine exactly what this business does and how its operational core is built. Headquartered in California, the company operates as a high-end automotive designer and manufacturer, focusing entirely on luxury electric powertrains and premium passenger vehicles. Its primary model line began with a high-performance luxury sedan praised for setting top-tier efficiency standards, using proprietary battery configurations and compact high-power electric motors designed completely in-house. The business model combines direct-to-consumer vehicle sales with strategic technology licensing agreements, providing advanced propulsion systems to established global performance brands. This past performance established a reputation for elite engineering, though scaling these complex systems from low-volume prototypes to mass-market commercial output has required massive continuous capital injections. The financial bridge sustaining this expansion is built directly on its relationship with the Public Investment Fund of Saudi Arabia, which maintains a dominant majority ownership stake. This sovereign wealth fund has continuously stepped in with multi-billion USD capital commitments, providing critical liquidity through private placements and credit facilities when public capital markets turned restrictive. This deep financial backing represents a fundamental pillar of the company's valuation, acting as a structural buffer against the cash burn rates that have driven independent competitors into restructuring. While standard financial metrics show a business consuming capital far faster than it generates revenue, the sovereign partnership views this asset as a core industrial pillar for international economic diversification, fundamentally changing how traditional insolvency risks are evaluated. Looking toward the future outlook, the trajectory splits into distinct structural scenarios based on production scaling and market adoption. The central catalyst on the immediate horizon is the production ramp of its newly introduced sport utility vehicle, an asset targeting the highly lucrative premium family segment. If manufacturing at the Arizona facility scales without major supply chain disruptions, the expanded product portfolio could significantly increase quarterly delivery figures and improve gross margins through better factory utilization. Additionally, expanding international assembly operations provides a direct pipeline into high-premium regional markets, potentially opening up consistent fleet orders that are completely isolated from domestic retail economic downturns. Conversely, significant operational risks remain embedded in this growth strategy. Prolonged delays in software optimization or component sourcing could stall vehicle handoffs, extending the current capital burn and forcing additional dilutive share offerings that weigh heavily on existing equity holders. Furthermore, intense price competition within the luxury clean energy vehicle space could force margin-eroding promotional terms, limiting the company's ability to achieve operational break-even metrics within the projected timeline. The constant tension between high-cost engineering milestones and actual marketplace demand will dictate whether the asset transitions into a self-sustaining industrial powerhouse or remains entirely dependent on sovereign capital injections to maintain its operations. In summary, the core conflict defining this equity is the ongoing battle between short-term public market skepticism and long-term sovereign strategic commitment. The immediate reality presents an auto manufacturer navigating severe operational losses, top-line misses, and complex legal challenges that naturally invite near-term downside pressure. Yet the underlying structural reality reveals an entity insulated by an extraordinary sovereign capital reserve, giving it the unique ability to fund advanced engineering developments and scale production lines while competitors face severe financial distress. This deep contrast between immediate financial strain and long-term capital backing ensures that navigating the asset requires looking well beyond simple delivery metrics, forcing investors to weigh immediate financial friction against the value of a fully funded technological foundation. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.